Hello everyone, this is Nuresh Mirani from nureshtech.co.in, making a video after quite some time, so bear with me if my voice is a little choppy or I tend to pause somewhere in between. So over the last few weeks, the Nifty has rallied after a breakout of 15,900, 16,000 to 17,300, 400 levels, and we've been above that 70 RSI ever since we crossed 16,500. And now very recently you'll be seeing a lot of comments in terms of how Nifty has been the most overbought since 2018 or say since 2010, 12, etc. So let us see what happens at Nifty at 80 plus levels where we are right now. So very recently we went to 80 plus RSI at 16,500 and we've gone up another 800 points. So just because it has touched highly overbought zones does not imply it should correct very swiftly. So this was 77, then we went above 80 plus, now we again went to 83. We've taken a 2-day drift, so there is no logic in preempting the breakdown. The only thing which tells you is the market is overbought. This may not be the best time to put money into large caps. We could be getting into a territory whether there could be a quick fall or a slow drift upwards or a sideways consolidation. But it definitely is not the start of a bull market where you expect a 20% bump up on the index at 80-85 RSI. So the last few times out here in 2021, we started off hitting the RSI 80 first time here in November, and over the next couple of months or more, we went from those price points of 12,900 odd levels to almost 14,600. So that was another 10% over the next 2 months. So out here, it was a 10% move. This was where we had just broken out into a new all-time high. So that was a start of a bull market type move wherein we got into a new pre-COVID highs out here. So out here, then we got a good 5-6% correction, but it would still not be if you started shorting here. So preempting at 80 RSI could be difficult. Same way we went to 80 RSI here, 2 more highs, 2019. 2018, now this was the time where we went to that 80 plus RSI and we topped out on the Nifty, and more importantly we topped out on the broader markets as such. But some bit of a trigger came from the 2018 budget, remember LTCG. So this is where we got 3-4 big gap downs after that. So this was the point of time which makes it scary that whether it is 2018 or not. But when we see other instances of touching 80 or closer to that 80 RSI out here in 2017, we went into a sideways period, but the broader markets continued to do well. Then in March, where we again, now this is the point of time where it goes closer to 80 RSI, but we are hitting a new fresh all-time high. So out here I would disregard RSI, because when we are hitting new fresh all-time highs, it has to be highly overbought. That is where it signifies momentum. Now, the next time whether we hit major RSI was the first time in April 2014, again fresh all-time highs. After that, we get a bump up on elections, then we go to 80 RSI, go into a sideways consolidation or rather a slow drift upwards. I'm not even going into the divergences as to the fact how divergences continued for quite some time but no major correction. Same way out here, we went to closer to 78 RSI here, went on to make 3 new highs before the big correction came into picture, and by that time we were at 80 RSI. Now this was 2012. Now 2010 end, we started hitting 80 RSI, 3 more tops before topping out. Now earlier, before that major correction, we went into a sideways consolidation out here. It's only when we started sustaining below this where the momentum became more clearer in terms of a trend change. But this was the period of time where the broader market stopped out. Now again, 2009, the first instant of hitting 80 RSI, we are starting a fresh bull market, so disregard the 80 RSI. 20% circuit, 80 RSI goes into an upward drift. Quite a few tops, a correction out here, but overall into a sideways consolidation. Now 2007 was the most interesting one. We touched 80-85 RSI. For the next 2-3 months, we kept on seeing index make new highs, small caps do really well, broader markets taking much of a charge. So essentially, what do we notice? Say out here, the better way to short would be on the way down here. So essentially, what do we notice at 80 plus RSI? You do not want to be putting a lot of leverage into play at these prices. There could be a slow drift upwards or a correction, but there have been more periods of, even if it's a major top in the making, it has taken some time before it starts topping out. And even if it's a correction, it can be just part of a continuation of a bull market trend. So this is what happened in 2009, where it continued and continued. And we don't know how longer can this continue in that bull market. Then in 2014, we got into a period where it was a slow upward drift, did not break any of the major trend lines, and we continued all the way till the end of the year. Same way in 2017, when we started making the breakout, we went to a closer to 75-80 RSI. Then we came to this closer to 80 RSI, got into a sideways position. Then it was only in January 2018 where we made a big RSI top. So we started this in November, December, we went on, we got into a major sideways consolidation here. When I say sideways, I mean to say this, correction, and then pretty sideways in terms of the markets. So out here, there is a good possibility we get into a sideways correction, and there is stock specific action. And in that period of time, you want to be very, very selective. You don't want to jump into every other stock. You don't want to have a lot of leverage in play. You don't want to put a lot of fresh money at play, because you want to put fresh money in play in November 2020 or in say March 2020, which is extremely difficult, but at least in November, March 2020, and not at these times. So you want to keep some cash if we go into a correction. After a consolidation, you want to be picking into new sectors. So in this corrective move, generally we see new sectors coming up. So whenever we went into such sideways period, so out here in this period, we saw small caps doing really well after that 80 RSI consolidation. Then in 2017, again in that period, small caps went crazy. In 2015-16, when we went into a sideways period, it was again selective small caps. So the view here is it would get very, very selective. Simply put, do not preempt a short just because it went to 75-80 RSI. It's very painful process of topping out. Bottoming out is relatively faster because panics tend to a panic reaction happens really fast. A topping out reaction takes time. So we could keep seeing corrections, but topping out could take time. That's my view. I can be totally wrong here, but the view is I wouldn't go short or say long out here aggressively anyway. Time to be more selective out here.